In this video, I'm going to try and describe some of the methods that I use to exit trades and to take profits. I constantly hear from traders, I get out of the trade too early and then I watch the trade absolutely take off. And there I am sitting on the sidelines. Or I waited too long and now the stock pulls back and I gave back most of my profits. So where is that happy medium? I'm going to start by saying that there is no absolute solution to this, but I think you'll find a lot of your answers in backtracking and kind of reversing your thinking as far as when you would enter a trade. And obviously, the more attractive a position looks on the short side, the more inclined you should be to take profits on the long side. So think about it. I'm looking, I'm evaluating, and an opportunity looks great from the long side. Well, why? Why did it look good from the long side? What were all of the inputs and all the variables that made you think this was a good entry point from the long side? If you use that same rationale and you're in the trade and you're wanting it to move higher and it makes a big move higher, and now all of a sudden you're starting to look at it, you should be using that same thought process to tell you when the picture is starting to shift to more of a negative outlook, and that'll help you determine when to take profits. Scaling in and scaling out is always a great way to even out your entry price and your exit price. The sooner you come to the realization that you will never sell the top, the better off you'll be. You're never going to pick the absolute best price to exit. Now, a lot of people like to use percentages for their stops. Personally, it's too mechanical. I see the market as being very, very fluid, and it is ever changing. Every day and every minute is different. Let's take a look at an example. This is a 5-minute chart of Yelp. And again, everything that I discuss here, I'm using 5-minute charts. If you like to trade 15-minute charts or 1-hour charts, all of the same principles would apply. So, Yelp, here's a nice look. We've got the stock moving higher. This is the opening. It starts to move and move. Wow, that's a nice big green bar. Well, if I'm day trading and I get a nice 40-cent pop in a stock like that, I'm going to be offering, seeing if somebody will reach for me and take me out, because I know I'll probably be able to repurchase and get back in at a better price. Well, that's just the day trading side of me, but it also works on a longer term basis. When you get these huge green candles and these big price spikes up, you should try and take some profits along the way on that. And here's another picture of Yelp, and you can see that, oh yeah, well that, yeah, came back, and now, but it's worked its way higher. Oh, now it's rolled over. This is a candle that I do look at. This is a hangman, so the stock made a new high during that bar, and it closed right on the low end of its bar, and the next candle was lower than that candle. That's a pretty good indication that you should take profits. That's just simply another technical pattern that I use. There are no absolutes in what I'm showing you. But by the time I'm done with this presentation, I'm going to give you a lot of guidelines that you should use in your decision making. So we see here that, oh man, there we go again. I see the hangman, I get out of the trade, boom, it continues to run higher. And here I am on the sidelines. How typical. And you keep expanding that 5-minute chart. Now you can see, yes, the stock really ran a lot higher and then finally started to have a little bit of weakness in here. But I haven't put any of the other information on this chart that I would typically use in my decision making. So let's add a few of the things that we use in the platform. For instance, buy signal, very, very useful. System's excellent in telling us when to get in and out. There's a sell arrow right there. If you wanted to keep this as simple as possible, you could simply follow the sell arrow when you're trading. So if you're day trading and you're using a 5-minute chart for entry, you could enter on the buy arrow and exit on the sell arrow. There's another buy, there's another sell. I tend to like to only be on one side of a stock. So if I've determined that I'm going to be trading it from the bullish side, I'm not going to be shorting it on red arrows. Those are simply places where I might consider taking some profits. Again, scaling out is always a good idea. You've got a nice runner right here, and then you could take some of your profits right here. Okay, now I've got a partial position on it. Hey, the stock recovered. Now it's making a new high. Oh, this looks good. Oh, take some more profits up here, or perhaps even exit the whole position. This gray line that you'll be seeing in a lot of the videos, that is simply an SPY overlay, so I can see how the stock is doing relative to the market. In this particular instance, I've got the market flatlining here. It's going nowhere, but the stock is really moving higher. I've got an indicator that I can use for that. It's this orange line that measures relative strength relative to the SPY. So when it's above zero, I know that stock is strong relative to the market. For instance, right here, I can see that it's losing its relative strength. In fact, it is weak relative to the market. Another thing that I look for, if the stock is rally, moving higher, and it's starting to compress, these yellow dots will tell me when it's compressing, and it starts to lose its relative strength and it goes negative, that would be a good sign to take profits because the stock is compressing near its high and the market is going up, but the stock is not. That's a good sign to take some profits. So those are all very, very useful tools. Now this is going to come as a shock to you, but everything starts with the market. That's what I preach constantly. Market first, market first, market first. Never ever lose sight of the market. When we're trading stocks, we're doing that because that is our edge. Relative strength is our edge. But the premise is that we're using stocks as a surrogate market position. So instead of trading the futures, we're using the stock. And that's because we have cushion. That cushion is our edge. So let's take a look at the market conditions. Well, here's a chart of the SPY, and you can see, wow, kind of random back and forth, a lot of volatility, a lot of big red candles and some very sharp declines. So lots of volatility. Still don't have a good picture of what's going on. So let me add some indicators. Major moving averages. The major moving averages that I like to follow, and again, I'm starting with a daily chart. Get your macro picture down first. Know where you are. You've got to be able to see the trees from the forest, so zoom out, take a look at that daily chart. So the major moving averages are the 50, the 100, and the 200. I also look at major horizontal support and resistance levels. So in this particular case, 256 would be a major horizontal support level. That also seems to coincide pretty closely with that 200-day moving average. So here you can see the market bounces off the 200-day moving average and it starts to move higher. Now, yesterday, you can see how it started to bump up against that 50-day moving average, but today it gapped up through that 50-day moving average. Well, that's very bullish, but this 100-day is a little more significant because it's a longer-term moving average. We still want to see it above that 100-day, and lo and behold, there we've got a little poke through on that 100-day. Very, very bullish on a daily basis. So let's add a couple of other indicators that we use. Here we can see that the market was in a compression, which means that it's coiled. Whenever it's coiled, we can expect that ensuing move to be big. It's like a spring that's been coiled and it releases. So now we're in the release phase, and we know that this move could have some pretty big potential. Another thing that we look for is we look for a system buy signal. We have one on a daily basis, but it gets even better because we have a divergence. This is my pressure index that we also use and overlay on the chart. And here you can see that it is negative. So the market has a monkey on its back, but it's still been able to climb higher. As soon as it sheds that monkey, goodbye. It is like rocket fuel. So we have a very, very powerful setup here. Buy signal, bullish divergence, negative pressure. And we've been in that compression, so we know it's ready to rock and roll. And we're above the 100-day moving average. So when I say market first, market first, market first, on a daily basis, it's all systems go. It doesn't get any better than this, okay? So I've got to have that mentality when I'm approaching my trading day. And when I'm entering long positions, in the back of my mind, I have to tell myself, Pete, this is a day when you could really let some winners run. So don't just take profits early and be happy with what you normally might take. This market has a chance to grind and grind and grind and grind higher throughout the course of the day. So you should try and weather these little pullbacks that are natural, that are going to happen in the underlying stock. Stick with the position. Ride it as long as you can. Take some profits along the way, but man, try and ride that wave as long as possible. Market rating. So I do watch the market rating in the chat room. And it's this top signal here. It is predictive, not reactive. So if I see the market going up, 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 and the market rating starts to drop, I know that there are some signs of danger ahead and that I might want to start taking profits on my day trades. SPY sell signal on M5 on a 5-minute basis and on QQQ 5-minute basis. So very short term, I'm going to have to weather a little bit of weakness because the market is going through a small corrective phase, but my 15-minute, 30-minute, 1 hour are all still intact. So this is a really good way to gauge what's happening across multiple time frames, is to look at these market signals. So just to reiterate, the M5 5-minute chart, the system is on a sell signal. On a 15-minute, 30-minute, and 1 hour basis, the system is on a buy signal. So longer term, everything still looks really good. So yes, I could take a little bit of profit along the way, and on a normal trading day when the market doesn't have this full head of steam and it's chopping back and forth, pretty directionless, yeah, I would be more aggressive on taking profits when I start to see these market signals deteriorate. Stock second. So now that we have our market bearings and we know that we've got a strong tailwind, now we start taking a look at the stock. But we need to start from the macro side of it, meaning a longer term perspective. So I'm going to show you the chart on Yelp. And again, you need to reverse engineer your thinking when you're taking profits. Because when I look at the trade and why I'm getting into the trade, I can outline that. Well, you can also outline the same case for getting short. So if the stock looks more and more like it's getting to be a decent short, then you should be taking profits. And that applies to a 5-minute time frame, a 1 hour time frame, a daily time frame, whatever you're using, you'll be able to pick up those same indicators on the short side. So let's take a look at Yelp. You can see how the stock got above the 200-day moving average. We had a buy signal, and most importantly, we had this divergence, this bullish divergence that I look for. Buy signal, negative pressure, monkey on its back, and the stock is able to go higher. Not only is this stock able to go higher, it blew through the 50 and it blew through the 100-day moving average. Came back and tested it a little bit, and oh, here we go. We're moving higher. Well, this was the day that we got into the trade. I posted this in option spreader. We weren't able to get our spread off, unfortunately. It would have been a really nice put credit spread, bullish put spread. But I did mention it right away in option stalkers chat room, and the stock really performed well. Well, we had great relative strength on a daily basis. We had the compression that we look for right here. So that's compressing right in here, coiled spring, big release. We get it right there in the gap up. So we know that we've got a market tailwind, big time. We know we have a stock tailwind, big time. So now we drill down and we take a look at the micro side of it. So we should be trying to ride this trade as long as we possibly can because we have lots of bullish influences right now. So we don't want to be willy-nilly, got to jump out of the trade right now. We can hang on to this trade for a while. And that's oftentimes what happens with traders is they start, and I'll tell you that when I've had a drawdown, I'm a much more cautious trader. I take profits more quickly. I want to get my account back and I want to have some positive reinforcement and I don't want to have to sweat out trades. So if you've been through a drawdown, you should take profits more quickly. If you've been in a market environment where it's directionless and you have no tailwind, you should be taking profits earlier. So there's our buy signal. We get this bullish divergence. Beautiful. We know we've got the market tailwind. We know we have the stock tailwind on a daily basis. Grind, 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 grind. Everything looks great. Yeah, that was a big candle, but I'm going to ride this thing out because I'm not going to take profits on that when I think that this thing's really got some potential. So here we go. We get that hangman right here that I referenced, and we have a sell signal on the stock, and we have the market kind of pulling back a little bit. And the stock is starting to lose some of its relative strength. Hasn't quite dipped below zero. Yeah, this would be a good place to take some profits, take some partial profits here. So now we see the market still moving sideways. The gray line is the SPY, and we see the stock getting right back on track. Now we've got that green buy signal, so we should be feeling pretty good about the stock again, and there's your relative strength. Hey, go mode. So we come back up, market's still not doing anything, okay? Very important. So right now in terms of day trading, I'm looking at this going, market hasn't been able to rally. I don't know how much gas it has left in the tank. And I get this sell signal by the system, and stock has lost its relative strength. That's not good. Okay, take your remaining profits right there. That's how you get out of the position. Now you could use in the option stalker platform, I do have trend lines, so you can automatically overlay trend line 20 or trend line 60. So you can watch for those trend line breaches as well. If you have a very, very steep move upward, you should be more inclined to take profits along the way when you get something like this hangman or you get a trend line breach, because the profits have come very, very quickly. There's a good chance that the stock is going to retrace pretty heavily. If you get, on the other hand, a stock with a grind 30-degree angle, just very, very consistent, well, in those cases, you can use a trailing stop and just kind of move it up with the underlying stock if you'd like, but that's a consistent grinding move that doesn't get too far ahead of itself, and you can gradually scale out of those positions along the way. But the most important thing is, do I have the market tailwind? Do I have it on a daily basis? Yes. Do I have it on a 5-minute basis? Not so much. Okay, well, If my intention is to be in and out of the trade short term, then yes, it'd be a good place to take some profits. I mentioned to you that every single day is different. Market conditions are dynamic. Stock conditions are dynamic. So you have to look at these variables every single day and review them. If you're a swing trader, you should be reviewing them after hours and really taking a look at what happened with the stock and the market and looking for that relative strength. Make sure that it's still there because that is our edge. So this is the market today. So now I come into a new trading day and I'm trying to evaluate what's going on. Okay, well, here's the market breakout. Beautiful. Yeah, we closed above the 100-day moving average. Awesome. We've got that same divergence that I'd mentioned. We've got the buy signal. We've got the negative pressure. Macro still intact. Looks great. But I got to keep an eye on this 100-day moving average. This is a good time for me to tell you that when I look at traders, or I look at chess players, or I look at quarterbacks, the one distinguishing characteristic that the really, really good ones have from the average ones is awareness. And so if you play a grandmaster in chess, he is aware of everything that's going on that chessboard, many, many moves in advance. And even though you might be able to see 6 or so moves out, he's looking 10 or 15 moves out. That's how deep his perception is. How many times have you seen a quarterback play for your favorite team? I'm a Chicago Bear fan, so I've been through this for 25 years. Oh, this kid's going to be great. He's got a great arm. Oh, look at him throw. But he doesn't turn out to be a very good quarterback. Why? Awareness. It's being able to see how the defenses are lining up, to be able to adjust, to adapt, so that when that ball is snapped, he's seeing things in snapshots that are maybe a second or two long, but he knows exactly what's happening because he has that total awareness. It's the same with trading. You have to be aware of everything that's going on around you, and that's why I always like to have a chart of the SPY up, a 5-minute chart, so that I always know what the market is doing. Market first. So when I came into today, I went, hey, this could be really good. We've got a nice gap higher, and the market could continue to push higher throughout the course of the day, but I know that the bid will be tested early. Why? Because we've had huge market selling and almost every gap higher has been faded the last week. Fade, 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 fade. Every time we get an opening gap higher, the bid is tested because sellers want to see how aggressive the buyers are. And buyers are pretty passive on the open. They also want to be able to see how heavy the selling pressure is. So I told everyone in day chat or in the option Stalker chat room that we can expect to see some selling pressure on the open. These opening gaps higher have been faded. Okay, well, that is something that I need to keep in the back of my mind. So you can see the 100-day moving average. I highlighted it in massive blue so that you could see what was happening. There's our opening gap higher, 5-minute chart, SPY. Market starts to pull in, and we get these big down bars, and things are looking pretty dang shaky. But I know that 100-day moving average is going to attract some buyers. As soon as we come down on it, boom, we bounce. Big time. Hey, I think the buyers are still there because we never even got down to it before they were scooping. So they were so anxious here, they were anxious here, they were anxious here. Oh boy, we're getting closer to it. I can't wait any longer. Bye, 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 bye. That's what you want to see off of a major support level. That's how you know that it's still a legitimate support level because the buyers aren't going to wait for it to come in because everybody else wants to buy there. They're going to front run it. They're already bidding up here. Gotta love it when it never makes it down to test that major support and it bounces immediately. Oh, you know it's going higher. So in my chat room, These are comments about 40 minutes after the open. The 100-day on the SPY is critical. We can poke below it, but we need to close above it. So that's a little bit more of a macro sense of what we need to see throughout the course of the day. But I follow that up with a comment. United Airlines is above its 100-day, and it's compressing at the high of the day. So this stock has not pulled back with the market early on. It's compressing, it's coiling. I will buy the breakout if the market finds support above the 1000 day, actually 100 day. Bad typo on my part, but uh, you get the point. Everybody got the point there. And then I ran a search and I showed everyone the results. And there's UAL. And let's take a look at what that stock is doing. So stock second. And when I know that I've got a market tailwind and that conditions are bullish, obviously I'm focusing on bullish searches. So from a macro perspective, I took a look at United Airlines. This is a post earnings play. You can see the A. It posted after the close. So there's the 100-day moving average. Now we're on sell signal here, but we flipped to a buy signal. So we've got that working for us. We've got the divergence. This wasn't quite that bullish this morning, but it started to improve because we could see relative strength on a 5-minute basis, so we knew that was going to be coming up. But most importantly, it blew through this 100-day moving average, and I knew that that support was going to be there. Stock second. Take a look at the micro side of it. What does the 5-minute chart tell us? Well, in this particular instance, I've got the overlay of the SPY because I wanted to show you that compression that I speak of. Okay, so here you've got the SPY opening near its high of the day, right on the open, and then we get this whoosh, this pullback right here. Well, what does the stock do? It compresses. And if this gap up were fake and it were all fluff, then sellers would have been pounding that stock right in through here, and they were. But the stock wasn't going up. It wasn't going down. Why? Because buyers were bidding it up. Buy. I'll buy anything you got. You guys want to sell? I'm a buyer. Well, that results in a compression, this yellow dot right here, and we can see it visually. You draw this little line across here, and you go, hey, if it gets above this compression right here, I'm in. So I bought calls and posted the trade in the option Stalker chat room, and it actually floundered around for a little while. There was a good probably 10-15 minutes for everyone to get in before it took off, but you could see stock very strong relative to the market. Market going down, stock not going down equals relative strength. So we've got that working in our favor. We also had a bullish divergence right here. Buy signal, negative pressure. Lots of good things going on a micro basis. So we get in here, stock runs up like mad. Sold half of my position here for a double. Well, why the heck did I do that? Look, there wasn't anything, no sell signals, great relative strength. This was simply a way that I manage profits. When I do earnings trades, I'm buying options that sometimes have a few days till expiration, or maybe they've got a few hours until expiration. So these options move like the wind, and I need to be very careful with them because they can go from being a double to going to zero in a heartbeat. I feel that if I take profits on half of my position when I hit a double, the other half of the position is free. So it's simply profit management for me. So I hit my double right here. Now I've got a free position, and trust me, it is so easy to take care of a position when you've already banked profits. A lot of the pressure is off, and you can really start to look at a stock objectively. I did mention earlier in the video, scale in, scale out. In this particular case, I did not scale in because that resistance level was breached. The compression was gone. I wanted to be out instantly. So I did take profits up at the top here simply because I saw the market continuing to deteriorate and I didn't know how long the stock would be able to hang up there. But I bought these options for $1.60. I sold them for $3.20 here and $3.70 there. So just a phenomenal trade in the course of a little more than an hour. It was about 120, 130% profit. I'll take it and I won't even think twice about it. So that also comes into play is what's your strategy? What was the duration of the trade when you got in? In this case, it's a day trade. It's very short term. I'm trading the most volatile options that there are, options that are extremely exposed to time decay because they expire in another 3 days. So set some targets. Hope that you get taken out at your target, because if you do, it'll mean that you made a lot of money. So the intent was never to try and catch the top here. So this is UAL, and I did want to mention that when we trade this pattern and we trade these compressions, the nice thing about it is that when we have the relative strength, when we have the divergence, when we have the compression, when you get in at this level on the breakout, okay, the stock again is that spring that releases and the underlying flies, and you almost always have cushion instantly, which was the case here. So as soon as the stock starts to lift off, you can place your stop right here. So my downside is limited and my upside is unlimited. This is why we trade this particular pattern and why we look for this setup: divergence, relative strength, compression. You don't always have to have the divergence. It's just another added element to the trade. But I will tell you that, and I will do a video on risk management and when to exit a losing trade, but those decisions really need to be made before you even get into the trade. So when I look at a trade like this, I'm buying that breakout and I'm going to give it a good 10-15 minutes, and if that breakout did not hold and the stock is below it, I'm going to get out because it should have taken off. That was my expectation going into the trade, that it was going to take off and that I had a good market tailwind, that the market was going to bounce off of that 100-day moving average. If the market didn't bounce off the 100-day moving average and it floundered around and kept sitting on that 100-day moving average and the stock went nowhere, I'd exit. I'd get out. I'd take a small loss. I'd scratch the trade, take a small profit, whatever the case might be. My theory and my thesis was flawed. The market did not bounce off the 100-day moving average. The stock broke out and it did not run after breaking out. So let's get out. Let's reevaluate. Let's look for the next opportunity. So I hope that this video has helped you with profit management. Never expect that you are going to exit at the ultimate price, at the absolute best price. It's simply not going to happen. And don't beat yourself up after you do get out of a trade and you see the stock continue to run higher. Be happy with what you've made, move on, and look at the next opportunity. And that's not to say that if the stock continues to keep going higher that you can't come back and reevaluate it, but it has to look good across all the different elements that initially got you into the trade for you to re-enter that trade. And you have to make sure that you've got a really good game plan getting out. So in this particular instance, if I got in here and I sold here and now I'm watching it run, to get in up here, I better have a very, very good reason to get back in, and this trade had better stand on its own and go through exactly the same rigors that I went through right back here. If it can pass all those tests, fine. You can re-enter the trade back up in here. Thank you. I hope this helps you with your profit taking, and you can look forward to other videos that occur during different market conditions.